What if the people building your banking app didn't actually know how to code?
Right, which sounds like a total disaster waiting to happen.
Exactly. But today, we are looking at a major financial institution where, well, non-engineers are suddenly pushing production software. Artificial intelligence is out there making autonomous financial decisions for millions of people, and the result, strangely enough, isn't a catastrophic system failure.
No, not at all. It's actually resulting in record-breaking billion-dollar profits.
Yeah, it's wild. Welcome to the deep dive. Today, we are peeling back the layers on the freshly released prepared remarks from Block's Q1 2026 earnings call. We're going to be focusing really heavily on the insights from CEO Jack Dorsey and COO and CFO Amrita Ahuja.
And usually an earnings call is this incredibly dry retrospective exercise. Like the quarter ends, the accountants tally up the columns, and executives basically just point to a historical spreadsheet.
Right, it's just a report card.
Exactly. It categorizes the past 3 months really neatly, but it rarely offers, a compelling vision of tomorrow. So our objective today is to throw that historical spreadsheet out the window. We really want to extract the underlying mechanisms, the why and the how behind Block's extraordinary numbers.
Because what we're looking at here, it reads less like a standard corporate report card and much more like a sci-fi blueprint for the future of money.
Yeah, that's a good way to put it.
I mean, Block isn't just treating artificial intelligence as a trendy buzzword to appease Wall Street analysts. They're using it to fundamentally rewire their internal corporate velocity while simultaneously transforming the actual tools they put in front of their customers.
And it's the collision of those two strategies, the internal and the external, that's really driving these unprecedented financial results.
Okay, so let's unpack this. Before we even get to the massive revenue numbers, we really need to understand the product philosophy driving them. Because in his remarks, Jack Dorsey emphasized this sweeping shift from passive information to active assistance.
Right, moving from just showing you data to actually doing something about it.
Exactly. So Block is heavily deploying this AI called MoneyBot across Cash App, and they are aggressively scaling something called ManagerBot for their merchants.
And just to give some context on the scale there, ManagerBot is already being used by 1 million Square sellers.
1 million.
Yeah, 1 million. And their goal is to roll it out to their entire seller base by June.
Wow. Okay, so that shift from passive to active, that seems to be the foundational thesis of their entire ecosystem right now.
It really is. Dorsey notes that when artificial intelligence actually helps a customer take a specific action, their ongoing engagement with the platform is exponentially higher.
Makes sense.
Yeah, way higher than when the AI simply, hands them a summary of their data. He actually frames these AI systems as what he calls protectors.
Protectors. Okay, let's slow down and look at what that actually means for you, the listener. Because historically, personal finance software operated a lot like the check engine light on your car dashboard.
Oh, totally. Just a little flashing light of doom.
Right. You would log into your bank account, and the software would essentially just deliver bad news. It'd tell you, hey, your cash flow is negative this week, or you spent way too much on dining out.
And there's nothing you can do about it at that point. The money's gone.
Exactly. It was passive reporting. Yeah. And honestly, checking a bank balance often came with the profound sense of dread for a lot of people.
Oh, absolutely.
But this new AI model, it operates entirely differently. It's acting like a hyper-proactive mechanic. It spots the pattern, alerts you that, say, a recurring subscription is about to overdraw your account, and then offers a one-tap button to pause that subscription before the engine actually blows up.
And if you take that a step further into the commercial space, think about a local coffee shop owner using Square.
Okay.
They are perpetually overwhelmed. They don't have hours to sit down at a laptop and parse through complex inventory spreadsheets to figure out, why their margins on oat milk lattes are suddenly shrinking.
Right. They're just trying to keep the line moving.
Exactly. So ManagerBot steps in and says, hey, your supplier raised prices by 4%. Would you like me to adjust your menu prices by 20 cents across the board to maintain your profit margin?
Wow. So it just handles the math and prompts them.
Yeah. By prompting the user to act before a minor discrepancy explodes into a major cash flow crisis, the AI is drastically reducing the business owner's cognitive load.
I mean, I definitely understand the appeal of reducing that burden,
Mm-hmm.
but we have to look at the other side of the coin here. Does this mean these so-called protectors could cross the line into being overly intrusive?
How do you mean?
Well, when an algorithm starts automatically managing your menu prices or pausing your personal subscriptions, Are we giving an AI too many keys to our financial house? It feels like a very delicate line between a helpful assistant and like a shadow manager running your life.
You're tapping into a really fascinating psychological shift in user trust here, because the assumption is often that people will reject automated intervention as creepy or overstepping.
Right, like Big Brother watching your wallet.
Exactly. But moving from passive tracking to active intervention actually aligns perfectly with how human beings naturally want to make decisions, which is to say, we want the analysis done for us, leaving us with a simple yes or no choice.
Oh, so it just boils it down to a binary decision.
Yeah, it's just the heavy mental lifting from the exhausted business owner to the algorithm. And if the AI consistently proves it's acting in the user's best financial interest, that feeling of intrusion quickly dissolves into a feeling of profound relief.
It becomes an indispensable, hyper-competent chief of staff.
Exactly that.
Which brings us to a massive structural hurdle. Because you can't promise proactive AI assistance to millions of users if your internal engineering team takes like 6 months to update a single button on the app.
Right. The internal plumbing has to match the external promise.
Yeah, that philosophy, the need to build complex, action-oriented protectors at a massive scale, requires a completely different kind of corporate architecture. The AI revolution isn't just a shiny feature for Block's customers. It is systematically tearing down the internal walls of how the company itself operates.
And to build tools that anticipate financial needs in real time, you need an organization that moves at an exceptional speed. Amrita Ahuja shared some really striking statistics on the call about how internal intelligence tools are automating Block's foundational work.
Yeah, I saw these.
Between January and April of this year, the number of production code changes per engineer increased more than 2.5 times.
That alone is an incredible leap in productivity.
Mhm.
But here's the statistic that truly stopped me in my tracks. Ahuja revealed that production code changes made by non-engineers at Block jumped nearly 60% in that exact same 4-month window.
It's staggering.
AI has completely redefined what it means to be a builder at this company. But let's be real for a second. If you allow operations folks or product managers or designers to push actual production code at a vast financial institution moving billions of dollars, aren't you courting disaster?
Sounds like it, right?
Yeah. I mean, it's like letting the passengers fly the commercial airplane. How does a company maintain any semblance of quality control or security when everyone in the office suddenly has the power of a software developer?
Well, it requires a completely different mental model of what coding actually looks like now. It's less like giving passengers the controls to an airliner, and much more like an architect using advanced 3D modeling software.
Okay, I'm tracking.
So the architect doesn't need to know the complex calculus of load-bearing steel or how to mix the perfect concrete foundation anymore, right? The software handles the structural math.
Right.
So the non-engineer at Block simply designs the logic flow or writes the prompt. They say, we need a feature that allows a merchant to split a specific invoice 3 ways.
And then the AI just generates the underlying code.
Exactly. But more importantly, the AI doesn't just write it. It instantly runs that new code against thousands of simulated test cases to ensure it won't, crash the Cash App servers.
Oh, I see. So it's acting as an automated bumper system, like bowling with the bumpers up.
That's a great analogy. It checks for compliance, it scans for security vulnerabilities, and it verifies the logic in seconds.
Wow.
By democratizing the building process, Block is allowing the people closest to the customer's problem to implement solutions directly. They no longer have to write a project brief, submit it to an engineering queue, and wait 3 months for a specialized developer to build it.
So the intelligence tools are the guardrails, proving Dorsey's point that increasing your corporate velocity doesn't mean you have to sacrifice quality.
Precisely.
Okay, so we have this army of non-engineers deploying proactive AI tools at lightning speed, fundamentally changing how the company operates. The natural question is, does moving that fast actually translate to the bottom line, or is it just an expensive high-tech experiment?
It's definitely not an experiment anymore.
Right, because looking at the Q1 scorecard Ahuja laid out, the return on investment for this velocity is undeniable. I mean, they absolutely crushed expectations across the board.
The figures are genuinely historic for the company. Gross profit reached $2.91 billion, which represents a 26 to 27% year-over-year increase.
Huge jump.
Yeah. Their adjusted operating income hit $728 million, which is a 56% leap. And they reached $1 billion in adjusted EBITDA, alongside adjusted diluted EPS growing 52% to 85 cents.
Okay, before we go any further, let's strip away the Wall Street acronym so we understand what these numbers actually represent for you, the listener.
Good idea.
You mentioned they hit $1 billion in adjusted EBITDA. For anyone not steeped in corporate finance, EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Which is a mouthful.
Right. Basically, it means if we ignore all the quirky tax accounting and financing costs, the core underlying engine of Block's daily operations generated $1 billion in pure profit in just 3 months. That proves their core business model is exceptionally lucrative.
And when you break down that billion-dollar engine into its components, the growth is remarkably consistent across their ecosystems. On the Cash App side, gross profit was up 38%. The number of primary banking actives grew 18% to 9.7 million people.
Which is a vital metric to pause on. That means nearly 10 million people aren't just using Cash App to split a pizza bill or send a quick $20 to a friend.
Right, it's not just a peer-to-peer tool anymore.
Exactly. They are treating it as their primary bank account where their paycheck gets directly deposited. And a huge driver of that stickiness seems to be the aggressive expansion of their buy now, pay later functionality.
Yeah, they've really leaned into that.
They've integrated Afterpay pre-purchase, allowing customers to pay in 4 installments directly using their Cash App card. They've expanded it to peer-to-peer transactions and to Cash App Pay. They also rolled out a feature called Cash App Score.
And Cash App Score is particularly clever. It takes Block's complex foundational underwriting capabilities, essentially the math they use to decide if you are a safe credit risk, and makes it highly visible to the user.
So they can see exactly where they stand.
Yes. Instead of credit being this mysterious black box controlled by legacy credit bureaus, it gamifies financial health within the app. It shows users exactly where they stand and how they can unlock more purchasing power.
You know, when I look at them weaving buy now, pay later into every conceivable everyday transaction, it feels like a much larger play than just offering flexible payments.
No, it absolutely is.
Are they attempting to bypass traditional credit card networks entirely? Because it really looks like they're trying to create a closed-loop system where the bank, the merchant terminal, and the credit provider are all just Block.
That is precisely the architectural advantage they have been building toward for years. Block's ultimate strategy has always been to connect their Square merchants with their Cash App consumers.
Interesting.
For a long time, Square and Cash App felt like two highly successful but totally separate companies living under one roof. What you are seeing now in these Q1 numbers is that connection finally gaining undeniable traction.
So credit is no longer a destination.
Right. You don't have to walk into a bank branch to ask for a loan, and you don't even have to apply for a separate credit card. The credit is a frictionless, invisible option presented at the exact second you make a purchasing decision.
Let's pivot to the Square side of that equation because the merchant ecosystem is growing just as fiercely. Their gross payment volume, or GPV, which is the total dollar amount of all the transactions swiped or tapped through Square hardware, grew 11.5% in constant currency.
And they saw a remarkable resurgence in food and beverage sellers with 21% growth and mid-market sellers growing at 22%.
They even saw international GPV spike 35%, and they expanded Square Bitcoin payments into retail and services.
A critical factor driving that merchant growth is their strategy around NVA, or new volume added. To capture all this new transaction volume, Block hasn't just relied on organic signups. They have been aggressively scaling their partnerships with independent sales organizations, or ISOs.
Let's define ISOs for a second. Think of independent sales organizations as basically freelance sales fleets.
That's a good way to picture it.
Rather than Block hiring thousands of full-time salaried sales reps to go knock on the doors of local diners and boutiques, they partner with these decentralized networks. They now have over 140 of these ISO partners ramping up.
It allows Block to capture market share across the country rapidly, paying for performance rather than carrying the overhead of a massive internal sales division.
Right.
It's a highly efficient way to conquer local commerce.
And speaking of local commerce, we cannot overlook the explosion of their Neighborhoods product. It expanded 190% to $320 million in annualized gross payment volume.
Yeah, that growth is wild.
In the month of April alone, they added more sellers to the Neighborhoods network than in the product's entire prior history. It proves that when you give local merchants interconnected tools that actually speak to each other seamlessly, the adoption curve just goes vertical.
It is an absolute pincer movement on the traditional financial industry.
Settle.
They are capturing the merchants through ISOs and neighborhoods, and they are capturing the consumers through Cash App and frictionless credit.
So having unpacked this extraordinary Q1 performance, we need to look at what management is signaling for the rest of 2026. Because with momentum like this, they're significantly raising their forward guidance.
They are. Block now expects a towering $122.33 billion in gross profit for the full year of 2026.
Wow.
Yeah, and they're projecting $3.34 billion in adjusted operating income and an EPS earnings per share of $3.85.
And looking specifically at the immediate future, Ahuja expects $3.04 billion in gross profit for Q2. She clearly communicated their intent to increase go-to-market investments in high-return areas across both Square and Cash App.
Which means they are taking this generated capital and pouring it directly back into their growth engines.
Exactly. Now, she did provide some nuanced context, noting an expectation of a slight seasonal sequential decline in primary banking actives for Q2.
Right, but it's important to note this isn't a red flag. It's consistent with historical seasonal trends in consumer banking behaviors during those months.
Right. People just behave differently in the spring and summer.
Exactly. However, they do anticipate a continued acceleration in overall payment volume growth as the year progresses.
She also highlighted a rather quirky one-time element, a tariff refund related to Square hardware that will provide a unique, little benefit to their Q2 gross profit.
Right, a nice little bonus there.
So if you're listening to this and wondering why a Q2 gross profit margin or a hardware tariff refund matters to your everyday life, it really comes down to capital velocity.
How so?
Well, this enormous financial war chest is exactly what funds the features on your phone. When a company has this level of internal speed and this much pure profit, they have the resources to aggressively capture more of your financial reality.
I see what you're saying.
This is the capital they use to completely blur the lines between your traditional bank, your local coffee shop's checkout counter, and your personal budgeting software. It is all merging into one seamless, AI-driven ecosystem.
Which brings us to a critical tension in the broader market. When you look at the pace Block is setting, automating their internal code generation, turning operations staff into software builders, and deploying these proactive AI protectors to millions of end users, how can traditional legacy banks possibly keep up?
I mean, they probably can't.
Right. The architectural advantage of having an agile, AI-integrated workforce is proving to be a towering competitive moat. A legacy bank might take 6 months of committee meetings just to update a single user interface element. Meanwhile, Block's non-engineers are deploying customized logic flows in an afternoon.
It's a different sport entirely. So, to trace the arc of what we've covered today, we started with Jack Dorsey's philosophy of AI protectors. That shift from algorithms that passively inform you of your financial dread to assistants that proactively take action to solve your problems.
And we explored how that philosophy sparked a structural revolution inside Block, utilizing AI guardrails to empower non-engineers to write actual production code.
Yeah. And finally, we saw how that internal velocity translated directly to the bottom line, resulting in billion-dollar profit quarters, an explosion in local merchant volume, and deeply integrated frictionless credit for millions of primary banking users.
But as we look toward this highly automated horizon, there is a lingering thought worth considering.
Okay, what is it?
As AI tools like MoneyBot and ManagerBot become increasingly sophisticated at protecting us, catching our billing mistakes, dynamically pricing our merchant menus, and automatically reallocating our funds to optimize our cash flow, what happens to human financial literacy?
Oh, that's a great point.
If the artificial intelligence becomes the ultimate frictionless financial protector, do we eventually lose the mental muscle memory of managing our own money? We are building an incredibly powerful safety net, but we run the subtle risk of relying entirely on the algorithm to understand the mechanics of our businesses and the reality of our personal bank accounts.
That is a fascinating paradox to end on, because we started this deep dive acknowledging that corporate earnings calls are typically just a look in the rearview mirror, a dry tally of historical facts.
Right, exactly.
But looking at the sheer speed of Block's internal AI integration and their expansive product roadmap, it is abundantly clear we aren't just reviewing what happened yesterday. We are staring directly at the automated proactive engine of tomorrow. Thank you for joining us on this deep dive, and as always, keep questioning the information around you.